Hey guys, alrighty. So I hadn't made a video in a little while. We've been out of town competing for gymnastics, and then we were on a little birthday trip. But back in town now, back to trading, thankfully. But so let's take a look at the daily here. So this is SPY. We got a new daily supply today at 477.86. So effectively, we have a really strong double demand here, and this 478.15, that is a supply that dates back to all-time highs. So that would have been back in like 2021, early 2022 there. So kind of what we're looking at, we have a nice little pattern here. So if you look back to December 13th, this was FOMOC day, remember. Since this day, we have essentially held inside this 467.4 to 478.15 range for over a month now. Now you can see here we had, much like this orange bull channel, we had the breakout, hard rejection, like this black bear channel that came down and then we popped. So right now we're looking at like a nice little double top M pattern here, which should bring us back down to 467.41. So on a daily time frame, we once again had the buyer's weekend. We got the new supply. Now, essentially, either we have a doji candle, big old doji candle close here. So we either need to see buyers come back in, hard bounce off the 8 EMA and push back and close over 478.15 with a new demand to then break out, which this could be a massive bull flag breakout pattern here. You can see we've been in the same bull pattern since basically October 19th. That's a very long time to be in the same pattern. If we can do that, then we're likely breaking out all-time highs, maybe 490, run kind of into FOMOC. However, if the sellers can come back in, then likely our target is going to be 467.41, and then we will look for, if we can close under that, then we might finally get our 50 EMA retest. Going over to futures here, same thing. We kind of had the breakout, breakdown, breakout, and now we're looking at, we're like most likely in the breakdown. We got a new supply at 48.11, so now essentially our month-long range here is starting to kind of get a little bit more narrow. So you can see we got 48.11 and 48.35. So either we are going to get a hard bounce off the 8 EMA and push up and close over 48.35 with buyers coming back in to break out, or more likely than not, since sellers on ES actually came back in today, we are going to break down and we will start to target 47.32 into the end of the week. Now, if sellers continue to come in and we close under 47.32, then likely we are headed down once again to the 50 EMA support. Now, when we go over to the Qs here, the Qs and NQ are just ever so different. So we actually got, here we go. On the Qs here, we actually did not get a new supply. And the other interesting thing about the Qs is that we actually had daily buyers come back in. Now, I will say for the most part that up until basically the last 5 minutes when we had that big old push, which this is kind of becoming a theme here, we were pretty bearish and we were, looking to be down here with weakened buyers and a new supply. So right now we're kind of at an interesting point here because we did get a new supply, but obviously we couldn't even touch, for the third day in a row, we couldn't even touch 411.52 supply. So we either need to see these buyers hold and come in even stronger to take us to 411.52 and close over that for a big breakout, or more likely than not, we will see buyers weaken again. Since we broke our bull channel right here, more likely than not, we will be looking to come back down here, and eventually our target will be 396.34 demand area here. So kind of same thing here. Now, if you really zoom out here, we got potentially a big bull flag that could be forming here. Now, we still have, the thought of whether this is a big old massive, bull channel here. So we're still in the big old bull channel. It's kind of tough because we broke that support, but right here, because we had a stronger, obviously, bull channel there. So right now it's tough to be bullish just because we are seeing such rejections and we can't break through this previous resistance here. But realistically, we are just stuck in a month-long range on both ES and NQ. So same thing here on NQ. We had buyers come back in, but on NQ, we actually did get a new supply right here at 16,959. So, you know, that again makes it difficult because we broke the bull channel. We basically have a quad top right here at the 16.5 or 16,958 area. So again, we either need to see buyers come in much, much stronger, not just, so, you know, you can measure the buyers a couple different ways. You can measure it from the previous candle, which that's when I say buyers were stronger or not stronger, or they weakened or they did not weaken. That's relative to the previous day's buying or selling and what it measured. However, you can also measure the strength of the move. So just for example, let's say today's buying is only about roughly, taking a quick look here, let's see, it's roughly like, I would say 10%, 10 to 15% of the strength that we were at back here in terms of buying. So essentially, the buying we had to support us in this area right here was essentially 8 to 9 times stronger than what the buying is right now. So the way I would read that is that we are not having the buyers come in to confirm this move up. But we are not having the sellers want to sell this off yet. Now we had some good selling right here come in. And then this, obviously this candle right here, boom, changed everything, that doji. So we're at a difficult spot here because obviously these dojis are anything but bullish. And the new supply is anything but bullish. But it's hard to want to trust the downside when you know we bounced just like that. So really, our range is still 16,455 to 17,130. So I am more or less, I guess I didn't talk about it. I didn't do a video on Friday because I was out of town, but I did do a post. If you guys missed that, it's posted up. But this will be my last post on the, or TA on the VIX. I'm watching it. However, I'm not doing any sort of video or any more TA on the VIX. So, TradingView has it kind of show different here. So you can see we didn't have a candle yesterday because markets were closed. So on the markets here, it's actually showing 8.98% move up on the VIX. But if you look at the actual daily candle, it's only saying 4.46% moved up. And that's because the VIX did move yesterday, even though markets were closed. However, TradingView included it in one day. So that's why we have a huge old gap up here. So big old gap up though. And essentially what we did is last week we confirmed 12.43 as demand again. So that's why it's a dashed line now. It's a super strong, very, very important demand. So we have our double demand support area, and now we have our double supply resistance area. So as you can see, 14.14 to 14.34 has been resistance, and we have not been able to close a candle over that since November 14th. So essentially 2 weeks into our rally. Now again, we had two opportunities. First was on December 21st, and the other time was on January 5th where we could have done that. So let's go back and look at, let's see where ES was at. January 5th is right here. So that's where we put our first bottom support in. And then January 21st, that's where we found our other support before we then came back down. So again, we're at a point here where either the VIX is going to hard reject back down and we're going to get the pop, or VIX is finally going to break out. Now, the reason I'm not going to be doing TA on the VIX anymore is that I have not, for at least a month and a half now, seen any realistic correlation between the VIX's movement and the market's movement. There used to be a huge edge that I had with the VIX, where I could look at a VIX candle and a daily SPY candle and be like, okay, these two candles together are going to make us do X, Y, and Z, or the probability is there that we're going to do that. And the odds were pretty high that it was going to do that. That has not happened in a very, very long time. And I just feel like there's no reason right now, at least, for me to continue to watch the VIX. Now, if we can break out on the VIX here and get up into that 15 area, and I start seeing some really strong correlation, then likely I will start to TA the VIX again. But for now, I'm going to kind of hold off on it. The one thing I do want to point out right now is the dollar and the 10-year. So this is something I am going to start watching here now. You can see the dollar has been in a downward trend since October. We officially put our bottom in on the dollar at 100.93 back on December 27th. And now we are on a nice move up here. And you can even see, if you look at our channel right here that we're in, we are in a new bull channel for now to the upside. As long as this bull channel continues to hold, this is a V bottom. So we broke the bear channel that essentially rode with ES and NQ from its October's lows to all-time highs. As long as we are in this up channel on the dollar, and I'll show you the 10-year next, which is also doing the same thing, it's going to be very, very hard for markets to find the strength to continue to push higher. We got a new demand at 102.289. Our next dollar target area is 103.632. And then we have a big, strong resistance area at 104.086 to 104.165. Going over to the 10-year here, same thing. We're going to zoom out so you can see a little stronger what I'm talking about. But again, this channel has been holding since October 16th. Our top was basically the week we put the bottom in on SPY. And we've been a nice steady sell-off here. So again, if we look at our channel here, we have essentially a breakout of the bear channel that we have been holding in since the rally started on SPY, and that the top was put in the 10-year. The 10-year and the dollar both broke this bear channel. Now you saw we have broken the weekly bull channel on ES last week. There's a very, very high probability, as long as the 10-year and the dollar are pushing up, that we are going to see a big down move in the markets. What I'm watching here on the 10-year is I want to see, and we did it today, we closed over 4.056%. We got a new demand at 3.94%. We are going to need to see a breakout through 4.106% with a target of this 4.237 to 4.26 area. That's also similar to this dollar move that we have here, where we're kind of targeting that 104 area. If the dollar hits 104 and the 10-year kind of goes for that 4.2 area, likely that is going to, in a massive way, bring the markets down. And that is probably when you are going to see this big old sell-off and we will touch the 50 EMA. I saw a really interesting statistic that it has been, I want to say 250 plus days since SPY has had a negative 2% day. And the last time that happened was in 2016. So we are set up and we are due for some sort of massive move. And I really do think a big move to the downside is coming on markets, whether it's this week or next week. But I'm generally pretty bearish right now. So, all right, guys, hope you guys had a good day trading today. I look forward to getting back in there trading tomorrow with you guys.